like I was talking to a group yesterday, and it was a group of agents, realtors in an area. There was a workshop, and they asked me to come in and speak to them. And they said, well, our investors aren't going to want to buy with these rates where they're at right now. And I said, no, an investor buys as long as the property cash flows. We don't really care if it's 3% or 10%, as long as it's cash flowing and works as an asset and the numbers work. I mean, obviously we don't want to pay 10% if we don't have to, but if the property is an actual positive cash flowing asset and somebody else is paying that, it's largely irrelevant to us as long as the numbers work.
Hi, I'm Wyatt.
And I'm Grace.
And you're listening to Our Dad and your host of the Vacation Rental Revolution podcast.
All right, guys, welcome to another episode of the Odyssey Vacation Rental Revolution podcast. I'm your host, Sean Moore, and I am super excited. My favorite type of episodes, because I get to have great conversations with amazing people. And we've got Andres Perez joining us, one of our Odyssey Empire Club members, going to share his journey and story into short-term rental investing. So Andres, thanks for joining us and appreciate you being here today.
Thanks so much, Sean. Really appreciate you hosting me in this podcast. And as I mentioned before, I'm really happy to be here, and also really grateful for all the support you and your team have provided through this journey. So yeah, really happy to be here.
Awesome. Well, we appreciate you joining us and sharing this story. And I, like we told you before we hit record, and everybody that's listening, we talk to our interview guest and we say, hey, listen, we're just going to have a conversation. And, we want to share the good, the bad, the ugly, the challenges. And so everybody kind of understands and can walk into this game with their eyes wide open a little bit. So it's always fun to be able to kind of rewind and walk back through the process and some of the challenges, some of the lessons, some of the things we did right, some of the things we wish we would have done different. And so I love having these conversations and being able to share these types of journeys and stories. But before we start, Andres, we're missing the second half of this partnership with Eliska. Actually, you have a 3-week-old newborn, and so she's you guys are busy with that. You're building the family. You got the 6-year-old daughter who now has a little baby brother, and so she was a big part of that journey as well. And so we'll make sure that we're missing her today, but we know that she was a big part of that journey as well, right?
Of course, yeah, definitely. We've kind of worked on this together, and us two, and also other members of my family, and other investors. So yeah, we as you mentioned, we have a 3-week-old, so we're splitting responsibilities and kind of working through it.
Divide and conquer right now, right?
Exactly.
Yeah, awesome. Well, let's dive back and kind of rewind a little bit. I always love to start with the backstory, where you guys are from, where you live, what's paying the bills right now, what got you interested in real estate investing, if you have real estate investing in the past, and what really drove us to short-term rental investing. And so I love to get the backstory of where, really where you guys started at.
Of course. So we are originally from Mexico. We are from a city called Puebla, which is 2 hours away from Mexico City. We moved into the U.S. about, me and my wife, Eliska, we both moved into the U.S. 10 years ago, this year. So in 2013, we moved to do I did an MBA in NYU. So we moved to New York City in 2013. We lived in New York for a couple of years. And then after that, I was fortunate enough to get a job at Google. So we moved to California, almost 8 years now. So we've been here since 2015. We lived in the Bay Area. We moved recently to Sacramento, to Roseville. So anyway, that's why we're here in the US. We have a 6-year-old and we have a 3-week-old boy. And in terms of paying, I guess as I mentioned, I've been working at Google for the last 8 years. So that's kind of been the main source of income. But what got us into real estate was about 4 or 5 years ago. I really enjoyed my job, and I've learned a lot, and it's been a very rewarding experience. But I realized that it's not necessarily what I want to do for the rest of my life. Might not be kind of the thing that I'm best positioned to do, or the thing that I enjoy the most. Even though, again, I've enjoyed it a lot, and I really like my team, and it's been a great learning experience. So anyway, at that point, 4 years back, we decided that we wanted to kind of explore getting similar story as most kind of real estate investors. We wanted to get an alternate source of income. So we kind of started sort of listening to podcasts, the whole drill. And long story short, I I purchased the property 3 years back, exactly in March of 2020 in San Jose. It was going to be, we're going to do house hacking. So basically kind of I got a like a FHA loan, purchased the property in San Jose. And then it was a property that had like it had a property distribution to do house hacking. We wanted to rent out one like portion of the house through like as a short-term rental. And that was kind of when the whole pandemic hit. So like we actually moved back to Mexico, and we actually rented that house out as a long-term. And then through like the rest, like the following years, I started kind of sharing what we had done with friends and family, and organically, like we were fortunate enough to get the trust from several I guess friends and family members, and they invested with us about like 700K from like 11 investors. So we purchased 5 other properties through in the last few years. Another one, which is where I am now, is in Roseville. Two long-term rentals in Denison, Texas, and then the two that I think is the 2 properties that I'm most focused on at this point, which is the ones that you and your team helped us kind of helped us kind of through the acquiring process and the setting process, which is 2 short-term rentals in St. Augustine, Florida. We bought those 2 last year. So that's kind of the story, right? Like in the last 3 years, we built this real estate portfolio between me and my wife, and also with the support of our investors, which we're really grateful for, because they sort of, without them, this wouldn't have been possible. Also, my sister has helped in kind of design and all that stuff. My brother fundraising. Anyway, it's been kind of like a team exercise, and yeah, I'm kind of overextending, but that's kind of how we got us into real estate. And right now we have those 6 properties, the 2 short-term rentals in San Agustin, which is kind of our main focus. We want to scale those. Those are working pretty nicely, and yeah, that's kind of where we're at.
That's awesome. I mean, and what a man, what a story of really just building. And did you do a lot of this? I wasn't aware that when the pandemic hit, you actually moved back to Mexico. And so were you doing a lot of this from Mexico, or were you there and then come back and into the US to start building that portfolio?
Yeah, it was honestly, like looking back, it's been like an awesome journey, and I'm really grateful how it worked out. We actually moved back to Mexico. So like we moved back to Mexico even before the pandemic. We wanted to spend some time with family back there because of our daughter at that time was like 2 years old. So we wanted her to get some exposure to family. So we were there when the pandemic hit, and like Google was very sort of supportive in kind of letting us work remotely from to me, they let me work remotely from Mexico. So that was very convenient. That's why I was able to rent out the property in San Jose long term. And then like while we were there, I got really hooked into real estate. So I was like looking at like what we could do next. That's kind of how I got the idea of like somewhere like close to the Bay Area, but not that close, which was kind of how we purchased the property here in Roseville. And so basically, like through this whole 3 years, we've been like traveling back and forth between the US and Mexico. Most of the time in Mexico, we came to the US for work, and also to like find the properties. So that's kind of how we've been doing it. And actually, like we've come to realize that that's what we want to do long term. So like we are setting up or working through how to live both in like half the year in the US, half the year in Mexico. We actually have our daughter, like we have her here in school here in Roseville, and then we already have a school in Mexico. So we want her to have like those two worlds for our kids.
Wow, what an amazing, yeah, that's awesome. I love it. And the exposure to be able to do that, and then just going out and being, when I hear you talk about it, one of the things I have a conversation with a lot of people that are just getting started is they always place these limitations on what resources they have available. And when I hear your story, the only thing that comes to mind is how resourceful you guys have been through this process, and being able to build a great team, and being able to raise some different money from those team members, and have these partnerships to where you're really being resourceful and building this portfolio pretty dang fast. I mean, that's a really, you're accelerating at a rapid pace. And these are such fun conversations for me to have, because it really shows the, you know, the determination to really go build something, but you're not looking at any limitations. You're saying, okay, how can we take this into a positive and really start building it? So let's dive into the short-term rental portfolio. So because you've got a mix, right? You've got some long-term rentals. Originally, like you said, it was kind of starting with house hacking, and then now that one's rented out. And those are on the West Coast, and then you got a couple in Texas. I always tell people I love real estate in general. You'll never hear me talk bad about really any asset class, whether it's long-term rentals, single family rental, long-term or multifamily, commercial property, all these different things. They all have pros and cons. And you've taken that kind of diversified approach where you're doing a kind of a mixed portfolio, which is really awesome. And a lot of people don't do that right out of the gate. They'll take one asset class that they focus on, but you've really become the expert in your group of investors and really taken the lead as kind of the general partner, if you will, of really going out and figuring this game out. What did you decide, or why did you decide to add and layer on short-term rentals into the mix?
Yeah, I mean, I think initially it was like we were trying to get our feet wet. We didn't know what we were doing, so like it was all organic. I think you hit on some key points. Like we tried to be resourceful and kind of use all of the different means that we had available to kind of get started. So initially, like we wanted to do house hacking. That was the only thing that we could do, and we wanted to kind of rent out one portion of the house. But then, like as things progressed, we just kind of adapted to the circumstances. Yeah. So we rented out as a long-term rental because that was kind of what we had at our disposal. And then we had kind of that inkling to do short-term rentals because we really enjoy that. I don't know, it seems like we kind of are attracted to that business model. And then when we purchased the second property here in Roseville, we purchased like with the intention of living here because like we could do a sort of a commute to the Bay Area. But then we lived here for 2 months, and then like the pandemic sort of kept extending. So they told us to work from home, like to keep working from home. So like we moved back to Mexico. So I told my wife at that point, I told Eliska to just like, let's rent it out as an Airbnb. Let's see how it goes.
Yeah.
And then we just like, she came back just to set it up, and we set it up, and it started working out really nicely. Like we weren't expecting kind of the house to rent out so quickly or so nicely. So at that point we're like, we want to do this like formally. So then we started kind of exploring markets. We were fortunate enough to kind of get connected to a realtor in San Agustin, which is an investor as well. So that was great. And then that's when we engaged with you and your team. Like we wanted to kind of get some guidance or like a partner to work with to get really involved in short-term rentals. So that's kind of the journey in terms of how we got into short-term rentals. Again, like initially that was the whole purpose, to house hacking, but then like things didn't work out that way. And then like we put this Roseville property as a short-term rental. It worked really well, and we really liked it. So then we're like, let's do this. Let's do this formally. So we found the market. We went to Florida. We flew to Florida. We drove around Florida like in 5 days, like from Miami to Fort Myers, Tampa. Then we went to Orlando, then San Agustin, and then we loved San Agustin. We really clicked with our realtor there, and then like we just kind of pulled the trigger on the property.
Yeah.
And that was like a year ago, like a little bit. So we pulled the trigger. We went into contract on October 2021, and when we closed it on January 2022. So it hasn't been that long. And then we bought the other one in April. So kind of we're not that, I guess we're newbies still on this game, but it's fortunately been good. It's worked out so far.
It's been, and I know you have some beautiful properties, and we're gonna, those of you listening to this episode, you can go check out Andre and Eliska's properties on we always have the links in the show notes. But so those properties, you just, is that how you decided to decide the area? You just kind of made a real road trip and landed on some of the areas. Obviously there's some underwriting that goes into it with what your, acquisition price and revenue and those types of things. But when you decided and bought that first property, was it any sort of a value add? Were you guys doing a lot of work to it before you were going to launch it? Take us through that process of what type of property you bought. Was it already a short-term rental, turnkey? Take the audience through what that property was like on that first one.
Of course. Yeah. And I think I think that the first step, as you mentioned, obviously, like, and it's clearly something that you teach on the course, is how to select the market. So like we did underwriting on the markets, and this one seemed to work nicely. I think one thing that we did is that we weren't kind of keen on finding the perfect market. We just wanted a market that worked and that we liked, and that once we found it, we just pulled the trigger on the market. Like the numbers worked, the regulations worked, and we liked it. It was a place that we liked. So that's how we kind of selected the market. In terms of the property, we wanted a property. For some reason, we've always, or something that I've wanted is like optionality with property. So like we wanted one that could be rented out as a long-term rental, also as a short-term rental, and also like that had like 2 units. And kind of we found this property. It was not a short-term rental. It was owner-occupied. It's like a 2,700 square feet property in like an 1,800 square feet lot, so pretty sizable lot. Again, it was owner-occupied, but the nice thing is it had 2 units. Like it had 2 units, so that you could rent it out as like a 3-bed, 2-bath, and then as a like a 1-bed, 1-bath studio.
Yeah.
We've never actually done that. We haven't gone through the. It takes like some work to do it. We haven't done it because it's worked out nicely as a full property. But yeah, we bought it. We bought it as owner occupied, and we bought it. We closed on January like 10th, I believe, of 2021. We flew there from Mexico, and then like we set it up ourselves. So my wife and I flew together. We closed on it, and my wife stayed for like a month, just like furnishing it. We bought all of it ourselves, kind of also like based on some of the support from your teachings, and just like, you know, like not winging it, but like we just did what we could.
Yeah.
And so then I went back to Mexico to like be with our daughter. We got COVID through that. We got COVID through that month, so that was also like interesting. But then we flew back. I flew back with my daughter. Like 1 month later, the property was all set up. My wife is doing the managing, so we self-manage. So she got the cleaners and kind of handyman and all of that. And we got it live February 10th. So like a little bit, like a month, like 13 months ago. And it rented out right away. So yeah, that's kind of how we got that one.
And that one, you got that one up and running, and we had a major event that was a little bit of a shakeup this year on the properties, right? With the name of Hurricane Ian. And that was when you talk about a stressful situation, I'm curious how that was, especially right when you're getting into a game, first property, diving in, seeing this thing bearing down on, you know, right in the area that you guys are at. How was that?
Oh man, yeah, that was obviously like, that's been the biggest challenge. Clearly, and it was actually not on this one. So like the flooding happened on our second property.
Oh, it was the second one that was the worst one of it. Yeah.
Yeah.
Okay.
Yeah. This one has been like, it's been great. Like it didn't flood. It has never flooded. But then the second one, which we bought like 3 months after, that's been kind of the problem child, if you will. Although it's worked. I think the revenue is okay, which I think I'm really grateful for that, because it works from a revenue perspective. But yeah, so the second property is basically the same profile. It's like a 2,700 square feet house. Like it's like for big families and big groups. And it's like 5 minutes away from the other property. So like we just expanded.
Yeah.
Basically. But this one, we got it in April. And then it flooded. It actually flooded twice. So it's a kind of a crazy story. So like it had been working nicely, and then like it flooded like end of September with Hurricane Ian. It flooded. So like obviously we weren't prepared for that. I had to fly to the area to like, we didn't know what to do. We actually like, again, I'm grateful for that, because we got you guys set up, you set up like a session.
Yeah.
I remember for that, and I was actually there when I listened to that session. So that was kind of really sort of encouraging, and it was a great resource. So I was there. We got a contractor, which is a handyman. We took us a whole month to like like get everything back up. Like obviously, like all of the furniture was ruined, so buying all of the furniture again. It was only the first floor, fortunately. But anyway, like all of the furniture, and then we had to like get all of the like sheetrock, like all of the flooring, all that stuff.
Yeah.
So I was there through that whole process. It took us a month, and it got like we finished on October 29th. I remember clearly. So October 29th, 2022. And the house looked beautiful. Like it was amazing how it came out. Like we obviously like pimped it better than it was before. Um, and then 10 days later, Hurricane Nicole came and it flooded again. So that was insane. So like two hurricanes in the span of 2 months. Um, so so anyway, what we did for the second one. So for the first one, again, I was there. We filed the claims, all that stuff. We get it all put like all ready to rent 1 month afterwards. And then for the second hurricane, again, it flooded once again, but we were much better prepared at that point. So we raised all of the furniture, so we didn't lose any furniture at that point. We got our cleaner to like raise all of the furniture in blocks or like move it to like higher spaces. So
Okay.
so no furniture was damaged at that point. And what we did is basically we worked with our cleaner and we told them like just get everything dried up. We are not gonna wait for another month to get it. Like we were hurting in terms of like lost rent. So we cleaned it up, we dried it up with like industrial fans, like mold deterrent or that stuff.
Yeah.
And like 1 week later, it was up and running again, and it was renting out again, and it's still renting out. Um, I I'm still waiting for the resolution on the second claim because I filed claims for both.
Yeah.
Second claim, I'm still waiting on resolution for that. That's still kind of in the process. For the first claim, it got resolved, and I was able to like recoup all of the out of pocket expenses and more. There's still some things that need to be fixed, but I think, I mean, it's worked out nicely. Again, we've kind of recouped all of our out of pocket expenses, and I'm still waiting for the money for the second claim. And once we get that money, I'm going to like do some repairs basically with that money. And what I'm also going to do is I'm going to try to get that. There's this like increased cost of compliance that you can also get,
Yeah.
like an extra bump, 30K. And I'm going to see if I can like get that property, like maybe raise the first floor, something like that. But anyway, that's kind of
So was the damage less because you knew or were anticipating the flood, so you were able to actually get in there beforehand and raise the furniture so that it was above any, like you said, put it on blocks or whatever else, so it didn't get wet.
Yeah, exactly. Like, yeah, we were kind of listening to the news, and like we asked our cleaner and our handyman to like go there and like just raise all of the furniture and like let's salvage everything that we can. We salvaged everything from furniture speaking, and we tried to put like sandbags and like all that stuff, but that didn't do anything.
Right.
But yeah, I think that's kind of how we manage the second one.
Wow. That's you want to talk about a stressful, I mean, one is stressful enough, especially, going through listening to the news and being there and having to deal with it. And then 10 days after it's put back together, you hit with a second one. Those are a couple of blows, but I can tell you, cause I know we did that. We did kind of an emergency type of a coaching call for all of our members that were down in that area right when that first one happened. And, it's amazing the spirit of everybody, even like in the wake of all that, dealing with it. And I guess just, we have such an amazing community, and being able to and the resources we were able to pull together, get you through that. But I know every time I talk to you, there's no secret why you guys are succeeding and why you guys are progressing and accelerating as fast as you are building this. And this is just the beginning for you guys, I know, but so much of it has to do with, just like we talked about before, your resourcefulness, but really just your attitude of saying, hey, we're going to figure this out and we're going to make it happen. Like I've never, ever talked to you since we've been, part of your journey, where you've really had any sort of like complaining or, hey, why is this happening to me? It's always like, hey, we're going to figure this out. You know, what are some of the next steps? Not that it's not stressful, not that it's not, there's things that we wish wouldn't happen that happen. You know, we don't want to deal with it, but it's, you know, it's a really testament to you guys for the attitude that you bring to a lot of these challenges and way you're able to get through them. And it's obvious with the successes that you're starting to have as well.
Yeah.
So on this, with that in mind, so we get past all that. You're, you know, down in Florida, we're the end of March. You guys went through, this is kind of, you've been going through your busy season down there, right? In the wintertime. How's it been? Everything got put back together. How's the revenue been? How's it been versus projections? Like, what are you anticipating moving forward?
Yeah, I mean, and I think we're really grateful because it's revenues is working out nicely. Like properties are performing as expected or even better, even with the hurricanes. So I think, and one last point on the hurricanes is like what we've kind of thought through on that specific property is obviously like a lesson learned is like you need to be more careful on like the areas that you invest in, like be especially if it's flood prone. But if you can get through it and the property works from a revenue perspective, maybe you can just like be prepared for them and then work through them when they come, which is how we've thought through it. In terms of the revenue, like I was working on some numbers for a call yesterday just to make sure I kind of shared the numbers accurately. And right now for 2023, again, these two properties are pretty similar. Like I think they attract the same market. They're the same size. Like again, big families and big groups. We are expecting them to so as of today, the properties. So I have like, let me see, like as of today, I have bookings for the two properties together. I have 110K of bookings for whole 2023, and I'm expecting to get around 250K gross revenue for both properties together. So like 120, 130K for each of the properties. Yeah, for the whole year. So that's taking into account, like that's like 75 occupancy, like 75 occupancy, which is what we got last year for the first property, which we've been operating for a whole year at this point. We got 70% occupancy. So I think we can hit that. We've been actually hitting it for the first 3 months of this year. So yeah, revenue wise, I think we're getting that. Yeah, again, like expecting 130K in terms of gross revenue for each of these properties for 2023. I can speak about what I'm forecasting in terms of profit, if that's helpful as well.
Yeah. What was the acquisition cost on each of those properties?
Of course. So like,
and what type of, I always like to know one when we're talking about that acquisition, if you don't mind sharing what type of loans and what you guys decided to do with that.
Of course. So for the first one, we that was kind of I guess it worked out. Everything worked nicely on that first one, and it didn't flood, so that even better.
Yeah, even better.
Yeah, the first one was 700K acquisition price, and we did that as a second home loan. We closed on January 2021, so we still got like a 3.3 30-year fixed, 3.3% fixed, 30-year fixed. So that was great. And yeah, in terms of like, I think obviously property values have gone down a bit in the last few months, but we still got in pretty nicely. I think that property has still appreciated even with the kind of the slowing down in the market. I wouldn't sell that property for less than 850. There were properties that were purchased, like a property next door was acquired for like 950, like 2 months after I acquired mine. So that was the first one, 700K acquisition price. We got a second home loan, 3.3%. And then for the second one, that wasn't as good, but again, it's still working nicely. I couldn't do second home loan. So we did a DSCR, like a debt service coverage ratio. That one, we got a 750 acquisition price. So that was at the height of the market. Still, I think we got in pretty nicely. I don't think you could get a property for 750. I'm pretty sure you can't. I mean, maybe you can, but either way, it's worked out nicely. 750 acquisition price. That was already a short-term rental, so it was furnished. So that was good as well. Like it was kind of up and running
Yeah.
from day one. Um, um, 750 again. It was a DSCR loan. That was a 40-year mortgage. The first 10 years interest only, which is also helping with cash flow. And that was a much higher rate. So I think what I didn't like, I guess, lesson learned for me, one of the bigger lessons learned for me through that acquisition is we went into contract in April when rates were still kind of low, and I did a DSCR loan, and apparently I learned that later is that you cannot do rate locks with DSCR, or apparently that's
Yeah.
what I was told. So initially I was considering like 5%, and it went all the way up to 6.8% when
Yeah.
I closed. So that was very painful.
Yes.
Even though still works from a numbers perspective, so we still pulled the trigger. But if I had gone like investment loan, conventional, I could have locked rate for like maybe 5.5. Granted, I wouldn't have like interest only for 10 years, but I would have a much better rate.
Yeah.
But anyway, you learn as you
When
go.
did you actually close on that one? Did you say April?
I closed on April, like April
April.
25. But I,
Yeah.
I I went into contract like 2 months before. From
Yeah.
both properties, we went into contract without having the money for the down payment. So like I closed, I guess I went into contract, and then like in the contract put like as much time as possible to close to get the down payment.
To get the down payment. Yeah.
Yeah. So
And
anyway,
so that time ate up some interest rates hikes on you.
yeah,
I was acquiring last year between that April and June range, and I had the same thing. And I was using DSCR loans, and I was making offers, and even while I was making offers, by the time I ended up closing, I was about 1.5 higher than when I was actually underwriting from that in that 30 and 45 day span. I was like, man, it's yeah, because you couldn't lock those types of loans in, at least the one I was using. And I don't think you can lock many of them in. And so there might be products that you can, but I wasn't aware, and it wasn't the one I was using. And I did the exact same thing. I was underwriting at a certain percentage point, and it was quite a bit higher by the time I ended up closing on it.
yeah, that was painful. It's
Yeah.
definitely one of the bigger learning experiences.
Yeah, for sure.
It is what it is.
Yeah, awesome. And so yeah, so I mean, both of them though, you're, whether it's a, 3.3 rate, those are, save that one, right? It's like, you never want to refinance that ever. Great, great rate and great terms. Obviously that property's probably a little more profitable because of that. When you just look at the actual net profit on the property, but if the other one still, like you said, numbers still work and it's still profitable, and you didn't, it's a different type of loan. It's not a debt to income type of a qualifying loan. So you're able to get into it, right? So we pay for it with rates and terms a little bit. And so, but if, like I was talking to a group yesterday, and it was a group of agents, realtors in an area, there was a workshop, and they asked me to come in and speak to them. And they said, well, our investors aren't going to want to buy with these rates where they're at right now. And I said, no, an investor buys as long as the property cash flows. We don't really care if it's 3% or 10%, as long as it's cash flowing and works as an asset and the numbers work. I mean, obviously we don't want to pay 10% if we don't have to, but if the property is an actual positive cash flowing asset and somebody else is paying that, it's largely irrelevant to us as long as the numbers work.
Yeah, totally. That's kind of my thinking process. It was kind of difficult to work through it because as it happened to you, like I was underwriting on a different scenario, and then like we were about to close, like rates kept rising, so I was like, it was really difficult. But like the decision was basically like, is it still working for us? And if it is, let's just, I mean, that's kind of the environment that we're in. Like we're not gonna get that lower trade rate, so like let's just move forward.
Yeah, exactly. It's the environment we're in. Probably not coming back down anytime soon. There's no indications there right now. And so if you can add an asset to the portfolio that works, it does make the numbers tighter and underwriting a little bit tighter. So not every property, some of those properties will maybe not work as well based on those rates and terms. But so we've got these properties now, we're performing. What's the focus for you guys now? I mean, I'm assuming you guys are going to continue to build, and what's the plans for the future as far as portfolio building and what you guys have planned?
Of course. So like we are kind of very passionate about short-term rentals. Like we love it. like all the business. Like my wife, again, Eliska does the property management. So like she loves hosting and like interacting with guests and all of that. So I love finding kind of the properties. So what we're focused at this point is want to scale what we have today. And there's several ways on how we're thinking about it going forward with this. First, I'm kind of, as I mentioned initially, like I do have like a full-time job, but I'm kind of exploring. I think it's getting to that place where I need to jump into this full time. So I'm kind of close to doing that. I think that's going to happen pretty soon. And in terms of how to scale, we definitely want to acquire a couple more properties this year. So I want to start. So I want to raise more capital. We've been really fortunate to have again friends and family in Mexico that want to have exposure to residential real estate in the U.S. But like I'm not going to go into the details, but the model that we've raised that capital on is not scalable. So I'm looking to like bring up partners that actually purchase the properties on their name, and I go in with a small percentage, and then we manage the properties for them. So we want to kind of set up sort of like a property management business first of all in San Agustin, which is the market that we're operating now. So we want to set up a property management business to kind of manage properties for other investors, and also potentially go into kind of like the realtor business as well, help them buy properties there. So like I'm hoping I'm planning to do that in the next few months, like get my real estate license and set up we already have the LLC, so we're kind of working through that. So that's kind of one component. Like, so our whole vision is basically building a bridge for people in Mexico that want to invest in residential real estate in the US. We already have like markets that we've selected; they're working nicely. So that's called kind of the whole vision, like build a business around that, nice. Like bringing capital into the US, and kind of managing those assets for them. So like it will evolve differently, but like that's kind of where we're aiming. So yeah, we want to get a couple more properties this year, or maybe more, depends on how much money we can raise, and yeah, just keep scaling. Like we have San Agustin now. I'm also like I'm exploring other markets. Like I wanna do one in Texas as well, potentially Frisco. Like I think that's also like an interesting market. I also like we're here in Sacramento, and I think Sacramento, like I'm investigating whether they allow short-term rentals. I think it's a part of California that's ripe for growth, and so that's another place that I'm exploring. And I also like I love skiing, so I want to find a skiing market. Lake Tahoe is obviously the first one to explore, but it's a very difficult market. I've been exploring kind of the Northeast, Vermont, Maine. Maybe that's somewhere else. But anyway, those are kind of ideas. I think the one that we can implement at this point is just scaling in San Agustin, because like we have the properties that are working. So like let's replicate that.
Right. Yeah. So initial, and I'm that's awesome. I had no doubts that there were some big plans in the future, and it's exciting to hear what you've got, you know, what you're and really diving into it really on the full-time scale. I mean, in a very short period of time. And I have no doubt you guys will do that. And I think a lot of those markets you mentioned have a lot of potential, a lot of things going on in a number of them. But it sounds like, you've got your footprint and kind of a business plan operating in St. Augustine, and being able to kind of focus there and be able to grow from there. Sounds like a great opportunity and a great plan. So yeah, that's super exciting. Have no doubts you guys will be able to pull that off, and it'll be fun watching you actually accelerate that. Knowing you guys, it'll probably happen sooner rather than later.
Thanks, and again, like I want to emphasize that thank you for kind of all of the support. Again, it's obviously been like once you jump into this business, like you have no idea. So like just a sounding board of like, am I doing the right thing? Like, is this reasonable? Am I like crazy? So that's been fundamental in our journey. So thank you again for that support, and also like our investors have been pivotal in helping us grow. Like the trust that they've provided, it's been like fundamental in us being able to grow. Without kind of this net of support from like experts like you and your team, and like people that trust us with their capital, which is like hard-earned money, we wouldn't have been able to do this.
Well, you're very welcome. We love being a part of that journey, and I can tell you, it's always a huge responsibility when you take other people's capital and they trust you to be a part of their, the going into a journey and investing with them. And just watching you guys and seeing what you're doing, I know how serious you take that responsibility and that trust that those people have placed in you. And I have no doubts that, you're going to be a great partner for them for the long term. And then as you grow, for those additional partners that help you kind of really expand the business. So it's fun to be a part of that journey with you guys. And so we've covered a lot. We've covered a lot of some of the challenges, some of the things that we learned along the way. I always ask one really final question before we dive into it. Before I get into the final question, I do want to thank you for sharing the story. I know that sometimes it's scary sometimes to get on, not that they should be scary to share our stories, but it's hearing other people's journey and story and success and challenges and ways they approach those challenges with such a positive attitude. That just, you don't know how inspirational that can be for a lot of people. So I'm always very, very grateful for these types of conversations, and for those of you that share and you coming on with us today and sharing it with our audience. And so thank you for that, Andres. It's been really a pleasure having this conversation. I love these types of conversations.
Awesome. No, pleasure is all mine, Sean. And thank you for giving us kind of the space to share this. I definitely kind of relate to listening to other people's stories on my journey. It's been like inspirational for me to like do things. So I'm more than happy to share what we've done. And if it helps people, I'm more than happy to like talk to people on kind of what we've done. And yeah, so thank you for giving us kind of the space to share that. And for other people to listen to.
Yeah, absolutely. Absolutely. And so the final question is, wait, if you could go back to yourself, 10 or 15 years ago, give yourself one piece of advice, and said, after kind of running through at least as far as we've run down this road at this stage, and you had to go back 10 or 15 years and tell your younger self, the best piece of advice would be what?
I think I'm probably going to repeat something that a lot of people say in this podcast, but I would invest sooner in real estate. I took a real estate entrepreneurship class when I was doing my MBA, and I really loved it. Like I liked it, and it was fun, and I kind of, I don't know if I was kind of passionate about it, but it rang the bell. Like it was something that I really enjoyed, and I don't know, I didn't have the motivation or kind of I didn't pursue that or kind of dive deeper into it. And looking back, if I had done that, I mean, I would be in a much different position if I had started 10 years ago versus like 3 years back. But anyway, like I think time comes to everyone. Life is the way it is. But that would be my advice. Like start investing sooner, as soon as possible, like whenever you can. Yeah.
Absolutely. I love it. And it's, you guys heard it here once again, probably if I had to say that the answer that we get 90% of the time is we wish we would have started sooner. It's one thing I love about the ownership model of real estate. A lot of people talk about different ways to get into real estate, either co-hosting, management, arbitrage, those types of things. Nothing wrong with them. But whenever I talk to investors and people that are having success and we ask them that question, it's a resounding, I wish I would have started investing sooner. The best time to invest in real estate, we always say, was yesterday. The next best time is today, right? And so start, like you said, start when you can. There's probably reasons why we wait, but getting in as soon as possible and getting that clock ticking to where we start building those property portfolios. I couldn't agree with you more. When we're in our 20s and super young, we always think we've got plenty of time. And then when we actually do start taking those steps and those action items and building that portfolio, we wish we would have done it when we were younger, because we realize how much we can compound the success that we're going to have by getting started as soon as possible. So Andres, again, thank you so much for joining us. You guys who are listening, you are the best part of this show, and we know how valuable your time is, and we really appreciate you spending it with us. And so one final thought that I always leave you with is a challenge to go pick one thing that you can do today to go start building that life that you don't want to take a vacation from. Cheers, my friends.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website?
Yes! For more amazing content and expert advice, visit Vodacy.com.
Thanks for listening, and we'll see you on the next episode.